Welcome everybody. You with the Market Sniper. We're talking gold. Yes, your favorite precious metal from Western Australia. Delighted to be coming at you from the west coast of the Big Island. Okay, let's talk about gold and let's look straight technically. I'm going to be putting forward a thesis to you that our long-term target that we've set on every gold channel that we've appeared on, and every time we've mentioned technical analysis with respect to gold, of 2,890, we've often referred to it as the doorstep of 2,900. Quite likely for us to see a run of 2,900. Let's go to the charts and talk more about this. Here we are. So the amazing point about this is we've got a confluence. What does a confluence mean? We talk about this a lot in our theory, and we talk about it a great deal in our program and in our community. By the way, get your free newsletter on the link below for the free mini course. You'll be included in the newsletter if you do that. More importantly, if you want to join our community, hit the link below. So what are we talking about? A confluence of targets are when many patterns, or two minimum, actually are giving a similar level across different time frames and potentially different pattern types. So the original call of 2,893, the doorstep of 2,900, likely to lead to a technical run of 2,900 and thereafter a rest, which has say that the 1,000 number, the round numbers of 1,000, you'll remember an upside HVF, we'll take you to that chart in a minute on the bigger time frames just now, that sat on top of the 2,000 after the once, twice, three times, then your lady on the break that took out the 2,000, that the next move would take you to the doorstep of 3,000. We'll show you that pattern and that draw in a minute. What's interesting now is we are getting a winding up HVF structure. Our community may be substantially long gold. I am on this particular setup pattern. That is a 6-hour pattern. It could be stretched to an 8-hour maybe. And this is giving us a target of 2,880. 2,889, in fact, my apologies. Let's get the number from here. 2,893. We'll get it eventually. There we go. Read your own box. 2,893 on this upside HVF. That triggered in and around the 2.6 levels around the 8th of Jan. We have now the 22nd of Jan. You've got a first interim make. This is what I love about HVF method that people should learn to appreciate and value, is that you stay the course because the things that happen are expected to happen when they happen, and typically are very, very compliant. You can see quite a low vol walkout break that happened there. You did number one stage, the break and feign back in stage. Then you ran first interim, which is that little dotted line. We make it more faint because it's not the most important target. It's the first step. Then you get what's called the return move to funnel stage, after acknowledging and making the first interim. This is very typical of HVF setups. We're going through the 5 stages to a breakout. You'll learn about that when you do our theory. Click the link below to book a call or a course. Then you move firmly away from the funnel. Often what happens is the first interim then serves as support. So you had a downside revisit here before turning and closing up there and then making a high there. You've had some degree of a pullback and you've had a hammer with the base of the hammer there. So there's 2 respects of the first interim as a minor key level of significance, 2,690. It gives you the number. It's the gateway of 2.7. You pull back, you just sit technically on the 2.7s. Remember, round numbers are pegging, but isn't that interesting how the first my first interim level target serves as support twice. Low volatility points to very low volatility after a strong hammer, which defended on the first interim, points to the likelihood of further upside. Upside comes, you run another key level, 2,730. Where did that key level come from? The reversal head and shoulders. That occurred up top here, that nobody really saw or talked about except us, I imagine, in the community again, where you had a final test of the 2,730 armpit 1, and you had the first test after the high, which is armpit 2 over there. You broke down, you made this target on the downside with a little bit of overrun as is typical. You can see a hammer in there and you got your reaction where you would have given back more than 60% of your short if you had taken a short. I don't short gold in this current environment on any time frame. And then further downside capitulation. There was a lot of dollar dominance during this period, and the gold sold off right the way down to 2,542. Some people got panicky. We had said 2.9. Why is it going down to 2.5 after trading 2.750 plus? That's not allowed. Well, it is allowed. It's part and parcel on anything. You had a kind of double top over here, but it didn't make targets to the downside, as it shouldn't, because we are in a macro bull. So not making a bearish target over a time period actually points to bullishness. You did get a breakdown. There was a clear level of significance there in and around the 2,630s-ish. But you failed to make fresh downside. Couple of attempts, failure to make a new low. You ended up having a little bit of a W bottom low with that level. The point of control as well, by the way, you'll see the volume by price in terms of this pattern is at its highest point over there. And that comes from this block of trading as well, which was very, very dominant. That served as resistance, the neckline, and that's why you got the leg up and you came back down to respect it and got a big hammer that gave us our hard stop for this particular structure. You didn't come anywhere near it, and you could have incremented that somewhat further. So what are we talking about in doing this analysis in 6 hours? What does it mean for you? We've given you a little bit of technical history of what's gone down and what is on the cards, but you'll see from this that we have a 2893 targeted expectation for this. So that means further upside. Do you whale in right this second? No, actually you've got a minor on the small time frame. By the way, this 6 hour isn't completed, but were it to complete like this, you've actually got a little bit of an exhaustion candle. You may well visit the 2,730 and just put a dip through again. You may be able to get there, and if lucky, you might even get a 269, all the nines in a pullback. You should have been, of course, in on the funnel because you had a resistance there. Let's actually clear our face again. See the kettle drumsticks. Kettle drumsticks is when, unlike being hammers and shooting stars, you get what's called range definition for the funnel. Even though you are walking out in a very low volatility fashion here, you still define the range to a degree. You can see this candle first tested down all the way and was rejected back up and then settled here on the point of control. That's like a hammer, only isn't really a big localized low. And this one is, again, acts similar to a shooting star, but is not a serious localized high. And they follow each other. They are in pairs, and they do not need to be directly after each other. It is you walking in the tunnel in the dark and testing where the ceiling and the floor is, because you're all crouched over. You don't want to bang your head, and you want to know how narrow is the tunnel as you're going through under the highway. And there it tested and pulled back. So that's a classic sign that your breakout is not far away. Look at it, all the stages we mentioned. So you're learning a little bit today. This is, you get much more detail on this in our theory, in our program, beautifully recorded for you with multitude of examples, and you can learn further there. Anyway, let's talk about this, because we've got another target that is also at these levels. Where did that come from? So when you have a confluence of levels, it's a very significant typical turn. You're looking at a 6 hour, maybe up to an 8 hour, a decent time frame. This is not 15-minute charts. This is not 5-minute charts. It's a decent time frame, and it represents a decent move. Even from here where you're sub 2,750, and I suspect you might come a bit off, a move through to trade through 2,900, even for a short period, is kind of significant. You know, you're talking about 150 of dollars from 2,750. Of course, you've been in with us in the 2.6s. You're talking a lot closer to 250, $275 that you should have been making with a little bit of leverage if you understand how to manage against serious loss. In other words, you reflect your full system with stop, your pending entry. You don't chase in at market. You await the market to take you in as a self-confirmatory event with either buy stops or limit orders. and you already have your target well detailed before. This gives you risk reward ratio. You need to treat trading as a business, not as a gamble. The minute you start becoming more business-like, businessmen know their profits before they buy. They have an idea of what they can sell in. They know what they're paying, and they know roughly what margin they hope to get. That's your risk-reward equivalence of trading effectively in markets. And you wait until that opportunity is available. You don't rush in and pay more in an environment where you're going to have to sell for less. And the market is going down and you don't even know if you'll get that smaller number. That's not typical of businessmen's type behavior. It's gambling. Okay, so don't be a gambler in the trading markets, particularly when it involves leverage. So where did the other target come from? We need to go onto higher time frames to discuss this. So I'm going to walk you back slowly. This is the daily time frame, and I think we might even need a little bit more than that. There you go. There is the first HVF winding up structure after breaking the 2K, and we said the thousands are going to be seminal here. Don't forget, let's also just take you up to a 3-dayer and get the bigger picture. Some of you might need reminding. I have a mental movie of this one because I lived it the whole way. Some of you others will also do, I'm sure. But don't forget, we had 2K as a technical level for quite an extended period. There's your first rejection, there's your second rejection, there's your third rejection, there's your break and your setup on and above and just around the 2K level. That was probably your best high momentum, fast moving breakout trade that took you quickly away from your stop. Do you understand the value of that? The rising wedge was now too many people chasing in along the bottoms. And even though you got the break up to the upside, that move was not as easy or as comfortable, and you got a hard sell-off during the period of dollar dominance over there. You can see that the setup under the HVF method was in fact the best. By the way, this risk reward is standing to be made and is 37.66 on the making. This has stayed there since that first setup was drawn. I've covered this with Elijah. I've covered this with Patrick. I'm talking about the Franklin Mint guys, SD Bullion, Tom from Palisades Radios. All at some point have been discussing with me the future for the gold price and got these numbers. By the way, go see XRP if you're interested in crypto, why these targets matters. Even after making a substantial target, the price behavior is still behind that level and may even be a turning event coming not too far off. I'm going to refer back to that. But first, let's answer, where did this target come from? And what you'll note is that that has a target that runs you from the low of the continuation pattern. This was an upside continuation through our broadening structure theory that you will learn and see and get the value of in our program. Click below to learn it direct from the only person that's done any form of clear-cut theory on broadening structures in terms of tradability, entries, risk rewards, and how to maximize. It's not our favorite. We like the squeeze, the low volatility. We check what happens in the higher volatility expanding patterns because we are specialists in volatility and patterns. Note how this pullback only really just, not even fully, to the splitter before making a move up. This was showing the setup was getting ready to break the 2K level. You now stand at 2,750. The projection from here all the way to there came from down here. I might even have to go to the weekly to show you that. I don't want you to think that we've sucked these numbers. This chart hasn't changed for a long time, by the way. So these draws have been on here and these targets have been provided for an extended period. That's not to say we haven't also called far bigger numbers, but you've got to trade day for day and week for week. And what I suspect will happen is that you're about to have a little bit of a localized high. Even gold turned here and you ended up sitting for 6 months before you meaningfully went significantly higher. In fact, it was more than that. I'm thinking of the Bitcoin. That was August 20, right the way through to 24. You sat for the better part of 3.75 years, 3.5 years, going largely sideways and failing to be significantly higher. And 99% of the time you were lower until this event. Don't tell me that doesn't matter to your performance, the time and concentration you give to a market. You can go away and focus somewhere else. Focus on the energies, focus on the cryptos, focus on the indices. There will be other setups that will be doing stuff. It was not the 3.5 years you wanted to be focusing on gold. It was chop and churn. Of course, small time frame traders might have found a little bit to do. Most of them don't make money in the long term. Real considered moves that take you away from the level, either to the downside or the upside, are generally where most people make their most money. In short, breakout trading, new level takeouts, this is where the money is made. Range traders, most people lose in a range trading environment. And all the stories you hear of selling and buying back and selling and buying back in a range, the only people who are typically successful often are in banks, and are liquidity providers themselves, and very dominant players. Anyway, back to this. That is where the target comes from. It comes from the long-term low right down here at 1,155 right the way through to here. This is projected by a HVF method, by the way, and has always provided this target. And now we have a winding up. So this is probably on a weekly time frame. I've compressed the candles almost disorderly, so let's also just do that for you in a bigger time frame so that you can see it. I'll also take off our HVF draw box because it's making a bit of mess now on these bigger time frames. That is the move from there to there, which was the beginning of the last bull market, to the localized high for the better part of nearly 4 years. Do you want to know where the localized high for a while is? And what does it tell you that it's the localized high for an extended period? Now, I'm not saying it's going to be 4 years. These have consistently got shorter and shorter, and gold is in dominant theme for upside. So I think it is going to be significantly less. But even if it's 6 months, I don't want to be sitting trying to buy a selling off market. What could this mean? We also are expecting a dollar super surge on interest rate spiking in the dominant world currency as per its design. That part, Brent Johnson on his dollar milkshake theory has 100% got accurate for me. And as a result, but this is not something to be bragged about. It's a condition of failure. We're talking about failure of all debt markets, and specifically the US debt markets, which are going to lead to an interest rate driven dollar shortage and increase in rates, which are likely to benefit the dollar short term in what is considered to be a sugar stroke schizo strength rather than a healthy strength. Bear this in mind, that could be coming. So when gold meets these key levels at the doorstep of 2,900, the reality could bite for a lot of risk on assets. That could mean both stock market, that could mean crypto, particularly as a high beta instrument. You could see a lot of pain coming down the chute. But for some reason, a lot of people are predicting March as a tricky month. I don't know how long it's going to take for this target to meet. We do have time stops, and I will refer back to that pattern and tell you how long it has allowable before we would close it. Yes, our method actually says if you haven't run stop and you haven't run target after a certain time period, new forces have come into play. The momentum is no longer on your side. Take what profit you have. Did you have anyone else whose method that you are utilizing that doesn't rely on lagging indicators such as RSI, MACDs, and anything else that is just repurposed price behavior with a mass formula that actually gives you a time takeoff? Our method does. That is why it is the most complete trading method you can find. HVF, volatility being the key word, funnel. Funneling is your gift, a fast takeaway breakout move with asymmetric rewards and tight risk. Just thought I'd reinforce that with you. So what are, for those that are saying, you're giving me bad news on gold and you're telling me maybe the dollar will run and all of this and pullbacks and all of that, but you've said bigger numbers than 2,900s. I've heard the 2,900s, but you've said bigger numbers. In due course, whatever then takes place that sees gold sell off, churn, not really make any more highs, what other form of progress, decay, or pullback or sideways action it does take. In the long run, we continue to see it making ever higher values after that time period. Remember, there are technical views for certain time periods. Right now, on the short time frame, we remain bullish till the target is run of making that 2,900. It is not my expectation that they whoever that may be, will allow a 3,000 run so soon after a 2,000 clear-cut break. The thousands have taken a long time to be picked off. If you think about the 1,000 level eventually being broken and then the 1,000 move to the 2,000. Can I point out, however, that these are getting ever shorter and happening ever quicker, as is the case. In actual fact, I should remind you, the Brown's bottom in and around the $250 part eventually saw gold run 1,000 up top during this period for a short period. As we were entering into the subprime events, and that the subprime events actually catapulted gold up. Despite the sell-off here, you ended up higher. And there's no such thing as bad price behavior. A pullback sets up a new amplitude, and this is the framing of HVF traders. We just don't have to be holders or investors during that period. It sets up a nice big fall, sets up a new potential amplitude for upside projection in new targets. So let's show you, for the want of understanding, some of those bigger targets that we suspect will be coming down the chute in due course from technical setups. And they involve 6,500 and 7,800. And by the way, if we were to have a major reset moment and the stop gets clocked, or the clock gets stopped, and there's no trading on a lot of things, and it's all Bretton Woods Mark II, panic, fear, etc., frozen assets, yada, everybody digital, everybody suffering for being digital, not enough physical, you know what I mean. And they were to reset gold. I have actually suggested that every European nation currently getting up to 4%, especially the Eastern European ex-communist nations getting up to 4% on gold holdings, could see them go 100% backed if gold was reset by 25 times in valuation, which as a Basel III reserve, tier 1 reserve asset could indeed happen to make all financial crimes of over-indebtedness no longer that serious. By the way, they wouldn't necessarily make it just 100% backed. They would rather trivialize the debt so that they can continue in a debt expenditure experiment, and they might even go 50 times so that they are twice over in cover. Play your favorite multiple, who knows? But on a degree of having made close to 2,900, let's just say 3 for the simple maths, 25 times that would take you to 75,000. That's just speculation and spitballing. It's a whole bunch different than the technical targets generated here. Also, by the way, we haven't gone and generated targets that far back from earlier history when gold was held at 20. So you can imagine that we do remain macro bullish on the course of gold. However, as someone who's also trying to understand the journey path there too, we do put a small warning of foreboding about this key level that has now 2 targets, 2 separate structures on different time frames, suggesting a localized high. The more patterns we see that are suggesting a certain target point to a confluence that may be a good time for those that are leverage trading and not long-term holders and investors to take off a little bit of profits. I wouldn't be selling investment held, stocked gold necessarily, but the duration and the pullback, I cannot answer, but I would imagine it would be reasonably significant. However, shorter than each one before. What we have certainly noticed is the pullbacks are in terms of scale, and the amount of time between cycle is certainly reducing substantially, and each time it's getting smaller. Remember, the cure will be very similar to what goes before and exceedingly bullish for gold, which will catapult it to those numbers I've now reminded you of on the higher time frames. So could this mean on the making of 2,800, here we go, read it again, 2,893, and it will be made by us, and it rarely takes as long as our time stop. I can count as a very small percentage of upside breakout trades that actually need the full gestation period of the pattern to make the time stop. But that's in 17th of, wait for it, March. beware the Ides of March. Beware the Ides of March. Funny that a lot of people have been suggesting a correction. So were this were to struggle on a little bit and take an exceptional long time and make it just then, it would be March. Were it to make it before, you would have the beginnings. Now gold typically is a leader. Bitcoin and crypto waited for gold to run. Gold broke out of its 3.5-year continuation pattern to move forward before Bitcoin dominance then came over the rest of the crypto markets and of course equity markets as well. So you might want to consider dollar dominance a potential threat and risk off on equity markets. Certainly you might want to even consider shorts on debt markets, longs on dollars. So the USD Korean won trade will be a great trade to hold when you take your gold trade off. It will make up potentially profits if there is dollar strength in a disorderly fashion. TLT shorts, for example, will also make plenty hay in the environment that gold is not going up. You see, the beautiful thing about this market is when gold stops running, you're probably looking at dollar dominance and debt collapse. Shortage on the debt, shorts on the debt markets, and dominant dollar trades will serve you very well. And we've provided two ideas. You don't know everything we do from the community, but we provided two very good ideas in shorting TLT and longing the USD Korean won or the Australian dollar, shorting the Aussie against the dollar. That will make you money in the time frame that your gold might be facing price sell-offs. So there you go. What day will it be? It needs to happen before the 17th of March, this target make. Otherwise, we will be closing this trade. It is performing ahead of schedule. If it were to continue in this general gradient, which I would characterize like that, and if we were to do it all the way, we would probably be somewhere during February that it'll top out. Remember, you might get a small blow off. I would expect the 2.9 to rain a bit of chop and churn, and then you might start to have a bit of decay, and then this kind of thing could happen, and it could coincide roughly with the March timeframe. By the way, I don't have any technical reason why March has to be that thing, apart from what I'm seeing here, which tells me the trade would be closed mid-March at regardless where it is, and that could be a potential trajectory for gold during that period, and it could lead to a progress decay period, a little bit of loss of momentum, possibly if it's a deep economic crisis, you may even get some degree of head and shoulder here, a rally, and you might find, and this happens quite often, the HVF funnel serves as a neckline, and you could sell off even more if it was an extended, really intense one. Again, this is not going to affect my investment. It is going to affect my trading to the long side, and if it gives an excellent setup as an investor, I might hedge slightly. I did say I wouldn't short. I might under certain circumstances, if I think the critical nature of it, only to a degree of hedging that which I already hold. However, bear in mind, TLT shorts, USD Korean ones are likely to be automatic hedges. So as I say, I'll treat that discretionary come the moment, and subject to the performance of those other and the setup, technical setup of those other markets that I've just described. Okay, so there you are. Gold to go strong to the doorstep of 2.9, likely to just run it, I would imagine. I don't feel it will be allowed in any way to run the 3,000, but if it got super disorderly and you had a once-off major spike, that would be, okay, a little bit min B case scenario. I would see that you're stopping before that. I truly don't feel they'll want that to happen. However, if it was going up super fast and it took a while to bring under control, you could have a blow off there. My guess is somewhere in between these targets of 2,880s and the low 2,900s, somewhere here is where you're likely to have the gold market turn around, as I drew in the initial instance. And thereafter, quite a lot of time, can't tell you how much, I'm not a clairvoyant, I'll wait for patterns, may pass before you are making new highs again. This could give fresh opportunity to buy on the lows. I wouldn't chase up and FOMO buy precious metals in and around these levels as you're making this upside HVF target. I would accumulate the fiat apart from dollar cost averaging into gold, which is never a bad strategy. I wouldn't put lump sums. There you go. That's our update from the Market Sniper. Click the links below for your free mini course and introduction to our monthly newsletter. And also don't forget, we're not too far off payroll numbers on a Friday coming. It will be in about 10-12 days, I think. We will have a live trading day. Look out for that. And to book a call, if you feel ready, and January is the season for you to get your head straight, build wealth, utilizing asymmetric trading, risk tight, expansive reward, understanding the macro movements of the world and what things are likely to move when, can see you pivot from one view into another and to be regularly in the green if called correctly. And when wrong, which is absolutely assured to happen, we're wrong all the time, only small losses taken whilst making expansive gains to the upside. Accumulate your wealth, your investment, and some judicious light trading with leverage, all with managed losses to the upside and to the downside. We can build wealth even in market collapsing. And as I've already mentioned, TLT will represent a short during this period for us and the dollar along. Till next time, thank you for liking and sharing. Bye.